Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 3rd, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 432. My name is David Cosmer. I'm the creator of Timing Research, and today is going to be a solo market outlook episode from the option professor. So you should be seeing his screen right now, and I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody to the Option Professor solo effort here. Before we get started, just a little background. I've been doing this for decades and taught seminars to thousands of investors, and I've traded thousands of these options and millions in stocks. So I'm a pretty knowledgeable guy, and I'm going to share my knowledge with you today. What I'm not going to be doing is giving any recommendations or advice to anybody because that should be done through your brokerage firm. I'm just going to be sharing my opinions and my observations. And so basically at the end of the broadcast, I'll explain how you can get a hold of me if you'd like to educate yourself more on how I do my timing and how I do my option trading. And also if you have questions on what you're doing and maybe the stuff that you're not so satisfied with that you've gotten involved with. So I'll talk about that at the end of the broadcast. I'm going to go over a lot of stuff here today, and I'm going to try to share with you as much information as possible so you could obviously come away with some information that would be useful for you. Okay, let's talk first about the S&P 500. Okay, why was the sell side the way to go here today? I'm going to show you. First of all, you've got a high point up here. I'm looking at a 5-year graph. You got a high point up here with an RSI around 73, and over here you got it at 68. So you got a little divergence there, which means it's running out of steam. That's on a longer term basis. On a 1-year basis, you can see it's back underneath my one red line here. The red line comes in at 52.86. So once it broke under there, that was another reason why it might be rolling over. Okay. Now I go to the short term because that's kind of what most people do, short term trading. And of course, I like to use the weekly options because they're very cheap. And if you get on the right side of them, it's a pretty good deal. If you get on the wrong side of them, the premiums are pretty small. With regards to here, you've got the market obviously having a lot of trouble up here in the last month in around the 53, 50, 54 area. You can see the RSI here was at 87, right? And can you see it's down in the 60s and the 50s and the 50s? That means that all this stuff here was done on lower strength, which means it's running out of steam. Think of a boxer who's lost his legs. After he loses his legs, he's going to be susceptible to a punch in the face, right? And that's what you got here today. So you can see the blue line is rolled over. Even though it penetrates, this is called a false move. Why is it a false move? Because all the averages are pointing down and the market really had no business going up there. And since it had no business going up there, it didn't last very long, right? Okay, so that's why we're coming down here today. And that's why this was in a sell zone, especially once it got back under 52.80. On a 5-day basis, again, you can see, and this is on the SPX, so you'd have to extrapolate it over to the E-mini or whatever the heck, SPY, whatever the heck you're trading. But, you know, this is the cash index. They're all based on SPX, you know, as far as the cash is concerned, or SPY. Anyway, you can see another one here, another false deal. You see, when you got everything underneath the purple line and it gets above the purple line and it can't last, that's not good. Okay. So now this thing is still pointing up. So I'm not saying we're going to collapse here by any means. It could be choppy. Choppy means back and forth action. Because, why would I say it could be choppy? Because you see on the longer term graph, this thing is not pointing down. And when it points down, that's when you get a decent sized move. When it points down is when you get a decent sized move. So there's no evidence of a big decent sized move. So I'm enjoying myself on a day trade and a short term trade today. But you wouldn't say that we're home free on the downside by any means because this thing hasn't turned over. On the 1-year graph, again, this thing is trying to turn over, but it's not really pointing down that much. And if it gets back above 5,300, you know, this thing could start making new highs very quickly. So again, I'm just saying on the day trade here, you know, on a short-term trade, like, you know, say you're doing this Friday's options. Today was the day to maybe take a little shot at the puts at 5,300 and take some shots at the puts underneath. And maybe you got some pretty good action here going right now. I'll show you a sector that I was focused on going into today that has exploded to the downside. Exploded, right? Okay, and I'll show you that in a few minutes. But anyway, you get the idea. You know, I like to follow the trend. On a 1-day basis here, this thing popped up early in the morning to the 5,300 number. But once the red line turns down, that means it's coming south, and it crosses green, more south, crosses blue, more south, and blue's pointing down, more south. So again, a lot of pressure over the market right now. This would be called like a resistance thing. But they're pretty, is there a possibility of a turn up from here? Let's take a look. Your RSI down here is 23, your RSI over here is 33. So again, you got a little divergence here. So you got a pretty good shot that maybe it could pop as long as it doesn't blow out 52.40. So right now, on a day trade, on a short-term trade, because you got a divergence here of what do you call it? 23 and then 35, and then over here it's 33. Since that seems to be the weak point, and this has been a little bit firmer, if you can get above 52.50, that'd be very positive. Okay, not very positive; it'd be somewhat positive. Okay, but everything's still pointing down. So my cup of tea is not when they're pointing down. My cup of tea is you sell it up here and you take some money off the table down here. And if it rallies again, let's see how it does up around here. So again, that's more about how I like to look at things. With regards to the 5-day, again, we're down here. So it's holding on to here. Again, with the divergence would tell me, start sniffing around to see if this thing might hold, if you're a short-term trader. The red line pointing up is not a negative, so you don't have the red line pointing down. When that starts pointing down, then you'd have some more problems. So, keep an eye on this neighborhood here. If it's going to stop, this would be the neighborhood to stop, somewhere around 52.40, if it's going to do that at all. The low today, 52.40, if it's going to hold that. And if it starts popping more like 52.45, like it is now trying to do, or 52 above 52.50, and certainly if it gets back above 52.65, that would be very positive. So again, you start blowing out 52.40, you're going to go into a little bit of the abyss down here. And if you can't do that, you could be near a support zone. Okay. Like I say, I am looking for a potential for a significant reversion to the mean. I am looking for that. You see all these numbers here, 4,000, 4,300, 4,800. I am looking for these things to get hit. I don't know if it's going to happen in June because these things are not pointing down. But when they start pointing down, believe me, I will be on the sell side. And I'll be looking for a large drop. And that may be August, September. Okay. But I don't know how old you guys are. I guess you know how fast time goes by once you get older, right? So I think of July, August, and September is no time at all, hardly, to wait. So I have patience, and patience comes in very handy. So again, do I think there's a potential of reversion to the mean? Absolutely. Do I think it's going to happen? I do. Could it also blow out these highs and make another new high and then make the reversion even bigger? That's possible. Would June be the month for that to happen? Maybe. Why? Because you got stock splits coming up on NVDA, and you got stock splits coming up on Chipotle. So people are going to get excited. And then you've got possibly some of these CPI numbers coming in a little bit lighter. Maybe that'll help the Fed. Maybe the unemployment will show a little weakness because temporary job creation has been coming down in the service industry, which means the service industry might cool off because they're obviously not hiring. In fact, they might even be cutting back on temps. So having said all that, this is going to be in, and like I say, when I look at a chart like this, or even like this, I can see that you kind of got a parameter here, and the low parameter is around 5170, right? And the high parameter is 5300. And so is it possible it stays in that window for a little while before it rolls over? Again, also in July, June is supposedly when the buybacks are going to be all completed or whatever, a lot of them. So that'll take a buyer out of the market as well. So if I was going to be a guessing man, I would say that July, August, September could be a rough racket. If there was going to be a reversion to the mean at all, it might be in that time frame because historically that time frame has been a rough racket for the markets. Again, this red line turning down at 52.86. The longer you're under 52.86, the more this thing will roll over. When red crosses over green, as you can see here, it's not good. If they all cross over at this, they all cross over blue, you're going to get a good drop. What kind of a drop did you have here? It went from 5,300 down to 49 and change, about 400 points almost. That's not a bad drop. What would that equate here? Well, if you went down about 400, you'd go back down here towards this neighborhood down here. And that correlates to one of the larger corrections that I think are possible here. So I'm looking for reversion to the mean because you know what I like to do. Again, I've got treasury bills and I've got stocks I own and I've got bonds I own and real estate, but I do have a portion of my capital called risk capital. And thankfully, with the high interest on the fixed income treasuries, me, like many other Americans, have a little extra cash to speculate with. And so these shorter term options where the premiums are relatively low. So if you lose, it's a relatively low premium. And the return, if the volatility spikes, is quite good. So that's the kind of stuff that I'm kind of focused on, risk capital stuff. Okay, so bottom line is that's where you are. I think I gave you a pretty good insight on that. Again, watch that 5240 neighborhood on SPX and see if it'll hold and see if tomorrow is turnaround Tuesday, right? Turnaround Tuesday and turnaround Thursday. So we'll have to see if that's the case. Okay. Wanted to give you a little, these are broad indexes, then I'm going to get into some other specifics. QQQ. Oh, two other things happening in June are going to be wild. Is Russell is rebalancing, which is annual, and then the SPX 500 is going to be rebalancing. That's quarterly. I think the 21st on the S&P 500 and 28th on the Russell. Okay, so here you go. Let's take a look at this baby here, the old NASDAQ. Looking at a 5-year chart, where you got here? Up here on the, what's your RSIs up in this neighborhood? Up in the 70, 69, and where are you up here? You're in 66. So you got a little bit of divergence, which means it's weakening up. But listen, the red line's still pointing up, so is green and blue. I'm not fighting the tape. See, you don't fight the tape. This is the tape, and you don't fight it. This is the tape, and you don't fight it, right? You fight the tape, you're going to lose. So the bottom line is right now, I'm not trying to fight the tape. But if I'm doing short-term trading, let's see if there's something going on. 1-year graph. Okay, just like the S&P, it's got that number right there. So I would look at that number really, really big. I think it was 5286 on SPX, and here we got it coming in at what number? 454. So we start trading above 454, 455. Here comes new highs possibly. We get back above 5286, and I think a very important on S&P is 5310. So if you get above those two numbers, I think it opens the door to new highs. Like I say, when you're doing trading, you can't get locked into one mentality or you're going to get whacked. In other words, you got to be flexible. You got to be humble. You got to go with the flow. Right now, the flow is rolled over to the downside, right? So obviously, you'd like to see the market pick up some steam and see if it can actually hold water. Otherwise, it could open up for a further down, right? So again, let's take a look at the 1 month. Again, you got to sell in the 1 month because you got RSI at 72 and you got it at 65. Ran out of steam. When it runs out of steam and the red line turns down, boom, I'm hitting it. So the bottom line is this thing's been telling you to sell it at 458. And where are you now? You're at 449. You see this move through the red line? What did I tell you about false moves? If everything's pointing down and for whatever reason it pops up, it's probably not going to last. Just like down here, comes down, right? Everything's pointing up. How long did it last? Not very long. Same thing on the upside here, okay? So that's why I'm saying if you can get above that 455, that would take it back above the blue here, and that would start saying that they tried to press it and they can't do it. That's not what they're saying right now. Right now, they're saying they're pressing it and they can do it. Okay. So there you go. 5-day graph. Anything going on? A little bit of a turn down here. Still got a lot of resistance here. Look at her and see a lot of sometimes these things will be coincident, meaning the purple line's right at 455. We've already established 455 as an important point. But everything's underneath purple, which is not where you want to be if you're bullish. Everything's underneath purple. Don't want to be underneath purple if everything's there. And you're actually underneath gold, which is also not that good. So, again, there's definitely a weakness in the legs. Turnaround Tuesday is tomorrow. If they can turn it around, great. If they can't, that might be telling us something too. Okay, so there's your NASDAQ. How about that Russell? Everybody loves the Russell. Small cap. They're supposed to be the place to be. Huh? Let's see how good they are. I think they said 40% of these companies make no money. So I don't know if that's the kind of index I want to be in. Uh, so I'm not a big proponent of it, but that's my opinion. Let's take a look. First of all, this also confirms, like the Dow Jones Industrial, that the Dow Jones Industrial has not made a new high, and the Russell has not made a new high. So those things are two things that are not confirming the new highs in the Nasdaq and the Dow and the S&P. Okay, so let's take a look at the Russell here, going back 5 years. It's this 210 area is, I think, is very important. It seems, on the RSI, if you can't get through the 60s, that means you're not going to go into the 70s or 80s. If you're not going to go into the 70s or 80s, that means you're not going to have an acceleration phase. If you're not going to have an acceleration phase, you're looking at a high point. That's it. So right here, so far, we're not going through the acceleration phase. We got a divergence, and the thing's holding on for some dear life up here at around 203. So 203 is very important. 200, I think, is even more important. So if this thing starts trading underneath 200, that would make me concerned if I was really bullish on this stuff. Because again, you're not going to go to 210, 220 if it starts breaking under 200. Now the blue line is rising. That's a good thing. And this stuff, gold and purple right here, that's a good thing. So 185 to 195 is your support zone. And the nearby support zones are 203 and 200. And your resistance is clearly at 210. If you can get above 210, sure, it could fly. It could go back to the highs. You can't get above 210, it ain't going up there. Okay, on the 1 year. Yeah, again, same story, right? These a lot of these charts are coincidental here. You can still see 210 is the thing, and you can see what I'm talking about at 200, 200 to 203, and it is, again, you had a false move out. Remember, if the thing's pointing down or flat, if it goes above it, it may not last. And here it didn't last. The red line comes in at 205.74. So there's another line in the sand. The longer you stay under 206 and 204, the more that these things can curl over. And you can see the RSI is holding on for dear life at about 50. So you start trading through 50 on RSI, you start breaking under 203 or 200, then I would get prepared for the sell side here. But that's just my opinion. All right, and you can see on the 1 month, what I tell you about false moves. You see, everything's pointing down. This thing comes up here, stopping everybody out. You short the market, you're not short anymore if you put your stop up here. So if you're stopped out, who sold it to you? Could it be a market maker like Citadel or somebody like that? Maybe. Maybe that's why they have all those billions. Because if they can move it through certain numbers and they're on the other side of the trade, now they're short at 207, and now they're making money at 203. And that move makes no sense technically, did it? No, a little bit suspicious. Okay, so that is the story, and you can see what I'm talking about. All right, so there's your major indexes, and the major indexes are filled with stocks that complete them. So obviously, if the tech sector is going on down, you're going to see the tech stocks going down. If you see the S&P big guys going down, then you're probably going to look at the Fabulous 7 going down, right? So let's take a look at some of the Fabulous 7 and see what they look like. NVDA obviously is coining money. How are they coining money? Because they got everybody excited on AI, which if you call up your stockbroker or if you call up your bank, you'll find out what AI is all about. It's about getting rid of those humans and making sure these machines can talk like humans. And when you tell them things, they're going to tell you exactly what you need. It's just going to be machine, machine, machine. Well, they started out with that by starting out with the ETFs, right? One-stop shops. You don't need to pick stocks, one-stop shop. And now it looks like we don't need humans, so we're going to put those, machines in there, and they're going to tell you exactly what to buy and sell, and what your asset allocation should be, and how old you are, and how many days you got to thing, and they're going to crunch all that data, and they're going to spit out an answer. But at the end of the day, like Buffett says, they can't tell a joke, right? So we always have to wonder if just using historical data is really always going to be the accurate way to go. Anyway, let's talk about these stocks and see what's going on. NVIDIA, obviously, like I say, they got the chip, everybody wants it, and the big companies have all that data, and these guys are going to tell them how they can take all that data and turn it into money. And obviously, they're willing to invest to see if that's going to happen. And that's the long and short of the story of NVIDIA. So again, NVIDIA's got a big lead, so to catch up to them is very difficult. Ask AMD. And they have got a situation where their revenue is exploding quarter over quarter. Here's the deal. As you go into later in the year, they're going to try to turn over into this Blackburn chip or something like that. And so if that doesn't go well, that people don't reload with that, that could be a problem here. Also, like Dell showed you, is sometimes the profitability isn't there as much, the margins or whatever, and so people could become companies could become a little more disillusioned. And then as we go into next year, don't forget the comps are going to be very big because you're going to be comparing to $22 billion revenue quarters. And obviously, if things were to slow down, this thing might have some problems. I've been in this thing a long time. These chip things, they do go through feast and famine sometimes. Obviously, NVIDIA is having the biggest feast we've seen in a very long time. But we'll have to see if that continues. And again, risk, always talking about the risk, right? Because again, when you've got a price of something up here, everybody's buying, who's selling? The other thing is concerning to me is the RSI up here is at 90 and the RSI up here is at 77. That tells me it's running out of steam. Would I short it here? No. Why? Because it's too high to buy and it's too strong to sell. So, but would I be loading up here? Not at all. Why? Again, because of the RSI differential, because of how far away it is from the moving averages, it's a very dangerous place to do it. Because if this thing has a hiccup of any size for any reason, whether it be economic reasons, geopolitical reasons, whatever the reason, it's vulnerable because it's so far away from its moving averages. And it's come out with such great numbers. And like they say, people have a little problem that they extrapolate whatever is happening will continue to happen. And that is true up into a point until it doesn't happen, right? So what's the story on NVIDIA? It's stronger than heck. It's going to split 10 for 1. You got to own it, I think, on the 6th, which means you'd have to buy it by the 4th, which is tomorrow. And we'll have to see. And of course, they're front running it a little bit here because they want to get in before the split. And so we'll have to see exactly, how that works out. On the 1-year graph, but there was a guy named Julian Robertson, a hedge fund manager. He used to have a line about some of these stocks. He goes like, bad mouthing NVIDIA is like bad mouthing Santa Claus. You know what I mean? In other words, it just has been paying and paying and paying and paying. So again, you're up here, and could it blow up to 1200 as easily as it could pull back to 1050? So again, with the split this week, obviously it's going to have some buying activity, which is what you're seeing now. 1 month graph here. Okay. 1 month a little more interesting. Your RSI is at 86, your RSI is at 82, a little bit of a divergence, and bam, you go to the downside. Now you rebound back up, you got a gap down here, and your RSI is only up to the 63, 64. Remember what I said and by the way, these are all my opinions today, but my opinion is if you can't get through the 60s, then you're not going to go to the 70s or 80s, which means you're not going to get an acceleration phase, which means you could be at a top. So let's see what happens here. You're at 1140 area, seems like a higher neighborhood. If you start going 1160, 1180, and this RSI starts blowing out 65 and going to 70, then this thing has got a shot of going to the 1200. If not, and it gives up and wants to fill this gap, going down to 1050, 1060 now to the question. And if it really got a sour, it's got a big gap here all the way down to 960. People don't think that could ever happen, but if I show you a longer term chart on it here, you can see back in 2021 the thing was going nuts as well. Not as nuts as it's going now, but it shows you that it can go from very good to very bad if things change. Obviously, people cannot even fathom anything going bad with this stock now. It is beyond the realm of imagination. So it could be something external that would be a problem, like an economic shock of some type or a geopolitical shock, something like that. But that's not what's happening now. But that's the risk. That's the risk. And the risk doesn't look like it's happening, but a lot of times it doesn't look like it's happening until it is happening. Okay. But that's the story on NVIDIA. Split this week. A lot of people buying. Again, I will be looking at that 1140 neighborhood as if you get above there, it's going to open the door for an acceleration phase. If you can't get above there, then obviously this could be a buy the rumor, sell the fact a little bit. So we'll have to see. Great company, can't badmouth it, but is this the optimum time to start buying? That would be one question. Huh? Okay, Google. Again, all of these seem to me to be candidates for a reversion to the mean at some point later in the summer. That's just what I'm thinking. Is it August and September or whatever? Now, and again, one thing that would cause things to revert is if the employment situation were to change. And that's going to start on Friday. Got a jobs report on Friday. Now, unemployment's around 3.8, 3.9. If we were to spike into the fours for whatever reason, and we saw the retail sales are starting to get a little shaky to begin with. So if in fact you were to get a spike in the unemployment rate, that could be the match that lights the fuse for some kind of a more significant sell-off. Okay, so what would be the story here? Let's find out. We got RSI here at 69. You got RSI at 67. Kind of flat, no big divergence. Okay, and obviously the trend is up, but obviously it's extended over the averages. Let's go look at the 1 year. Okay, you got a high point here, 75. You got a high points up here, 71. A little bit of a divergence. Again, just like the S&P, because, again, these things are the S&P, right? So, again, yeah, that number, it's 176 and change. The longer it stays underneath that, you could pull back. But everything's pointing up. Everything's pointing up. So it's not a time where we're going to get a big drop, in my view, because, again, everything's pointing up. Now, if you did get a big drop and everything's still pointing up, it might, like if it went down here to try to fill the gap at 163 and all these averages still are pointing up, I would think it would be a buy down there until these averages roll over like they did here. That's when the downside makes more sense. Otherwise, it's just pullback rally, pullback rally, pullback rally. And right now, there's no reason to believe why it's not pullback rally. At least that's how I'm seeing it. Again, I try to look for when the odds are on my side. I have money, don't want to lose the money, and I've got some risk capital, and I'd like to take some good shots. Okay. So the bottom line is I know my odds are pretty good when the stuff looks like this on the downside. Not so good if it's just looking like this. In fact, when it's looking like this, you buy the dip, you sell the rally. You buy the dip, you sell the rally, and this is again buy the dip. And maybe you get the rally until it starts looking like that. End of story. And I'm patient because someday it will look like that. And the higher it goes, the more it's going to drop when it starts looking like that. That's my view. So I'm a patient guy. I know one thing, there's a lot of people coming into these things, and the higher it goes, when and if it comes to come out, there'll be a lot of people want to come out. Now, like I say, how fast does time go by? Very fast. So can this thing have a good June and July? Sure. And then what about August and September if things change? Like, again, the unemployment rate starts going up for whatever reason, like the inflation starts really coming down. And then the Fed starts cutting. But they're not cutting from strength, they'd be cutting from weakness. So if the Fed starts cutting, people think that's bullish. And if they start cutting because unemployment's taking off and the consumers dried up and the credit card balances are killing them and that kind of thing, then it's not going to be bullish when they cut. You got it? I got it. All right. That's the Google story. Let's see what the other big boys are doing. Microsoft. But right now, 180 looks like the high on that thing. So the longer it stays under 180 on Google, and again, this thing looks like 435 is the high point, right? Longer stays underneath that, but it hit some support. And the last time it hit there was a buy. So again, until these things start pointing down, like they hardly even did here. That's why this was a nothing drop. but it comes down pretty good over here, right? Comes from 380 all the way down to 320, and everything's pointing down. So if you want to try to get into an extended downtrend, you're going to have these things pointing down. And they're not doing that just yet. But this thing obviously hit a point here. So if you were trying to buy the dip, obviously that number of 404, which coincides exactly with the purple number of 405, that's where I would have taken my shot if I trade Microsoft on the long side. Now, if it blows that out and you get these things all crossing over, now you got a different story. That's why this thing could be choppy. Highs are in, lows are being established, chop, 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 and see if this red line can get more extendedly pointing down. So at least you could get this kind of action here, like a 430 down to 390, get a $40 drop. Well, heck, you just got a $30 drop. And the RSI underneath here is not helpful either. So, it's at 40. Again, 40 could be a low point. When it breaks under 40 and you go into the 30s or the 20s, that's when you're going to end up at 370. So if this thing does break here at 404 and the RSI breaks under 40, I'd have this on my radar, really. Keep an eye on it. 1 month, obviously the dam broke, but here's your gap. If this thing can hold down here at that 404, which it's doing, that would be a logical place for it to go back to. Again, not my cup of tea because everything's pointing down. But you can play it for the bounce if you think that that's going to happen. And there was your spot to do it, right there, 404. Okay, next one up, Apple. Apple, AAPL. Okay, on Apple, let's go to the longer term graph. All right, you got a high point up here. I love the puts on Apple. This year up until it hit the purple line. When it hit the purple line, puts were over. Okay, but I did love it until then, and I'll show you why. Okay, you're up here. You're at 75, 76. And then you go up here, you're at 64. Big divergence tells me you're out of steam, just like a boxer. I just want to see the red line turn down. Once that turned down, your legs are gone, hit you in the mouth, you're going down. Okay. And there you go, all the way down here. Puts made pretty good money. Short-term puts, this was a good place to be. Okay. Again, this was a place to get long. And now you're up here. And RSI is at 60. And what did I tell you? Once you get around 60, you got two choices. You're going to go to the 70s or 80s, which is called an acceleration phase, or you're at a high point. And that's the story on Apple right now. So if it starts getting into the 65 to 70 stuff, you're going to see 200, and you're going to probably see 200 blown out. Okay? If not, this thing's going to lose its steam, and it's going to start having go, if it goes back to 180, it could stop there. And if it goes under 175, and then if it goes under here, 165, it's going to open the door for a big correction. Now, what's this thing got going for it? It's got all those phones we're using, right? And they got this AI feature. So are they going to come up with some cockamamie story where everybody needs to reload their computer so they can get AI on it? It's possible. And if that happens, it probably blows out 200. Okay, on the 1 year. Again, very extended, right? And here you had a run up to 69.70, right? Another run up, 63, right? So it's losing some steam. And right now you're at 68. So this thing peaked up here at 69. Not a big, well, here you got it at 72. So you have some 72s up here. Yeah, some 72s. And you've had a little spike up here. That looks like it could be exhaustion. We'd only have to see. But again, the red line's still pointing up. So I'm not jumping into something, just because the thing ran out of steam. It has to run out of steam and it has to turn the trend down. So it's running out of steam a little bit, but the trend has not been turned down. So, and of course, I'm not interested in buying it way up here because, again, it's got a big gap down here. The averages are way down here. And if something happens here, there's a lot of vulnerability. 165, very interested. Up here, I'm wondering if it's going to either accelerate to the upside, which I can't confirm yet, and B, I'm wondering if it's going to have a bigger drop. So I'm going to go to the 1 month and see if that wondering can turn into something more positive. Yeah, again, it ran up to 195 here. Again, you see, you can't get through to 60s. You can't get through to 60s, which means you're not going to go to the 70s or 80s, which means you're not going to go to 200 or better. Right? Right. So what am I saying here? I'm saying it's still vulnerable to a pullback. There you go up here, pulling back here. That's why it stalled at 193. See why it stalled at 193 on a short-term trader? That's why it stalled at 193. Now, again, if it takes out 195, because we know where the resistance is here, it's all around here at 196 and 200. So, and the high recently here is today is 190, what, 5? Yeah. So again, is this taking off and going to blow out those numbers? It's possible. It's possible, particularly if they came out with an announcement on something, which they're supposed to do later in the summer. Or maybe even in the month of June here, give you a little hint and then maybe bring it to market at the end of the summer. So at any rate, that's what this thing is, I think, holding up on is that are they going to come up with something that everybody wants to reload their phones? We're going to find out soon enough. On a 5-day basis, what's happening? Again, and a 1 day, what happened on the 1 day? Okay, so it's trying to come back up. Again, 193.80, where, okay, so it's trying to get through here. Everything's still underneath on a short-term basis. I would say if it starts getting back above 195, you can't fight the tape. And if it gets above 200, then I say school's out. And just imagine how far it could go if, in fact, everyone had to reload on those phones, because there's 9 million people who have them, right? 9 million, probably 500 million people have them, right? Okay, so that's Apple. Time to obviously got in was the 165 area, and right now it's going to make a decision. 195 to 200, right? What's the decision? They're going to have a new phone, and it's going to go to 240, or they're not going to have anything, and maybe it'll pull back like the rest of the market. So it's in a very critical zone up here between 195 and 200. I'd monitor it pretty close. Could have a lot of potential because of the reload on the phones. Okay, what about Meta? Meta. Let's try that again. All right, guys. What's going on here? Meta, we go to the 5-year graph, and Meta tells us it peaked out here at about 530. Why did it peak out, Jim? Here's why, because the RSI hit 86, and then it hit 72. It ran out of steam. What I tell you about that boxer, legs are gone, but we're not going to get him to hit the canvas until we get that red line pointing down. And we did break the red line and got him on the canvas pretty good, but now he's trying to come back up. And you see, green is up, blue is up. So again, it's too early to say it's going to have a full-blown correction. So let's see if it's possible that it's a buy the dip deal. Obviously, buying against green wasn't a bad idea, right? What about on the 1-year graph? Oh, it hit the purple, right? So we hit the green and we hit the purple. That's coincident averages. That means you got 2 good reasons why 420 was a good place to buy. Now it's in the juncture. This is called the traffic jam. Anybody been in New England? They got those rotaries, right? And it's a big traffic jam around the rotary. But at some point, it gets out of the rotary and they go on their way. Same thing in Europe and England, right? They got those rotaries, and then all of a sudden they got a main drag and you're on your way. So here's the deal. You're in a rotary right now, and it's going to go someplace. So where's all the averages? All the averages are between 466 and 471. Looks like it's trying to break out to the upside, doesn't it? Right? So right now, I'd have to favor the upside unless we blew out 466. Today's low? No, that last week's low was 454. So last week it held the 120, right? It held the 120, but it did penetrate the other two. Let's go shorter term, but it looks like it's trying to break out to the upside here. Yeah, it's a sloppy chart, right? Because this thing's pointing down, the red's pointing kind of down, green's pointing up. So this is like a confused. And when you're in a rotary, that's what it's going to look like. Because again, it's in like this traffic jam. It's in this like crosswalk, and think they could break either way. When you get a market like this, it could break either way. One of the strategies I'd hit the button on it would be pricing out the strangle, where you take both sides of the market and let somebody else sort it out. Yeah, if it goes flat, you lose on both sides, right? But if it takes off one way or the other, one of them may very well be able to pay off the other one and give you a profit, or maybe you can close out one side and get some of the money back and let the other one run. Uh, so that would be something I'd price out to see if it made any sense. But that's what Meta looks like. And again, right now you stay above 466, very positive. You stay above 471, very positive. And then, of course, if you break above 480, it looks to me like if you break above 480, you're back. Yeah, you break back above 480, you're back on the bicycle. So what are the numbers? You want to stay above 460, 465 and 471. That's where you want it to stop. Make sure you hold above. And then you blow out 480, you should be back on the bicycle, and it should be going someplace. Now these guys got so many eyeballs, it's ridiculous, and they're monetizing them as much as they can. And now they're getting into all the AI, so they can figure out every time you hit a button what you might want to buy, and then they sell it to the advertiser. And yeah, I saw this movie Zuckerberg. If you ever want to watch a movie, see how this whole crazy thing started, throwing photos around and putting your personal data in for free, and then them taking your personal data and doing a lot of things with it. So that's the foundation of this thing, I think. But again, like Charlie Munger said, there are some markets, some stocks, you need to try to figure out. And he said with Facebook, I don't even want to figure it out. I don't think he liked the way they were spreading different messages that weren't exactly Mr. Clean. Okay, so that's the story on Meta, and that's a very interesting story because it's actually looking like it's going to make a decision, where the other ones, don't look like the timing is, right there. Okay, so some of the other stocks, you wonder out loud, like AMD. Everyone got very, very excited, and I'll show you an example of why don't want to get very excited when things go up. This thing went up to 230, and everybody thought they were going to compete with with what do you call it, NVIDIA, and they're not NVIDIA, and now they're not NVIDIA. Not that they can't go back up, okay? Because right now they're going to make a decision on that. It starts getting above 165, it might start going back up 170, okay? But they have a gap up here too that could get filled a little bit above 200. But again, you got to be careful. If you buy it up here, you're on a big conga line going, I hope I get my money back. That's not a conga line you want to be on. Another one is Taiwan Semi, right? Taiwan Semi. Hey, these guys are making all the chips. So you would figure they got something going, right? So again, this thing has been very, very good. Let's just look at a longer term graph. Look, again, this thing broke up at a 100 back in January. And look, it's been following it up all the way. Now, again, what did I tell you about false moves? This thing goes down to like 125, but everything's still pointing up, which means that's not going to last very long. And can you see it didn't last very long? Right. Now you got a situation of what? 78 over there and 70 here. So you got a divergence. You got to be careful. Could it pop if NVIDIA pops? NVIDIA goes to 1400. I'm sure it'll go because obviously these guys are making the chips, right? But let's take a look at the shorter term graphs, see if it tells us anything. You see what I'm trying to say? How a lot of these stocks had this little red line just point, but it's not really pointing down yet. See, this is another example why you got to be careful because if it gets back above red, which here was 154.64, if it can get back above there, it could fly again. So let's see if this is a false move. If by the end of the week it's trading under 155, and under 150, then it wouldn't. But the RSI is turning up a little bit here. So I'd be very positive on this as long as this stays above 149 and 155 and 145, particularly 145 and 155, if you can get above there. Because that could have some legs to it. And so that's some of the exciting. Oh, I didn't do Amazon. Now, again, the guys with the web services and stuff, Google, Microsoft, and Amazon, they are the lead dogs also in this AI thing. There's no doubt about it, right? So again, Amazon, again, where are you here on a longer term basis? You had a high here at 76. You got another high here at 68. So that's why you're pulling back. Ran out of steam. But the red line has not turned down. So if this thing gets back above 182, I would become very constructive on it, on taking out the highs and moving forward. Okay. So again, get above 182 would be a positive, and then holding above the green, which comes in at 173. So it gives you some parameters to work with. Okay. Again, you're not going to get big drops unless everything looks like that. You get it? When it starts looking like that, it's going to get a big drop. Is that going to happen someday? Absolutely. What day is it going to be? If I was a guessing man, it's going to be August and September, which means you've got months before this thing will roll over. Because these averages don't roll over in a day. They're longer term averages. They give you kind of where the main highway is, right? Main highway turned up here. The main highway's been going north towards Boston from New York. Boom, right? Here we're going from where? We're going from New York down to Miami, right? There you go. All right, what does it look like in a 1 year thing here? Remember, I told you get above 185, 182. There you go. So you can see a lot of congestion between 180 and 185. You get above 185, you got a pretty good idea that it might get going. Okay? Because that's where all the resistance is right now. And again, another false move down. For whatever reason, it goes down here, probably to stop out a bunch of people. Who's the buyer when everybody's getting stopped out and the trend is up? I don't know. Probably a market maker, maybe. That's why these Citadel people, they make a lot of money. Because if they buy when everyone is panicking out and the trend is up, and then it goes from 165 back into an uptrend, they got a nice $25 jump on it in a week or two, right? That's not a bad deal. So sometimes market makers, if the prices do go through and they get an acceleration phase and they step up and do buying during the washout, that's not a bad thing to do. Or if people go crazy at 190 and they don't notice the RSI is drying up, and they are the seller up here to all this potential buying, when it drops back down, and again, this sometimes the market makers, and this is all my view, and they're not doing anything illegal. What I'm trying to say is that making a market and working with the liquidity of the markets can be decent, because when the liquidity dries up, like when people are all selling and nobody's buying, and you're the only buyer out there and you're putting up your own money, you can drop the bid and take in all the action. And then you got to hope, obviously, there's no more action behind it. And if you're right, that's how it happens right there. All right. So we went through a lot of the bigger markets, and now I'm going to go over a couple of commodities, and I'm going to show you what I got in for this week that worked out pretty good. Let's look at gold. And since gold is almost off the board there, we're going to look at the August gold. I've been pretty good with the gold here, so I'm going to give you a hint on what's going on here. Okay, you can see that this thing was kind of, it turned up basically at 1600. And then the trends have been going up ever since 1600. Again, another false drop, right? Held on to purple, okay? But, that's what you're another chance to buy at a cheap price. Then once you get back up here, you're back on the bicycle, right? Now, once you got above 2100, you went into the acceleration phase. The acceleration phase goes up to 80. Then you compare it next door, you're at 63. That's a very big divergence, which has me very concerned that the highs on the gold may be in, okay? But this thing is very powerful. And again, if they're going to drop interest rates at some point down the road, the dollar will probably be affected. And if the dollar goes in the tank, that could be the fuel that this thing's looking for. These central banks have been buying gold like people would buy water in the desert, like it's going to come in very handy. And so, bottom line is that this thing is very constructive. And again, there's no evidence of a downturn at all. Let's look at the 1 year. Now here you got more of my concern being shown. So again, we're having a good rally today. God bless it. But you can see that the red is trying to turn over, and it comes in around 2400, 2393. So if we blow out 2400, that would lead me to believe that maybe we're going to blow out the highs. Okay. So again, I'm sometimes from the school of I'd rather buy it at 2,400 on its way to 2,500 than buy it here and find out it's going down to 2,200. Some people have a hard time buying at a higher price. I don't, as long as I know better that the direction is going to work out. Okay, so there you go. And again, a lot of congestion right in here between 23.75, 23.80. So we're right up against resistance here, and 23.93. So there's your neighborhood of resistance, 23.75 to 2,400. If it can't get through there and then it starts taking out 23.30, then you're going to go to probably a full-blown drop. So watch it because it's pretty much right there. Same thing on the 1 month graph. Let's see, probably turned up now a little bit, but look, remember 23.75 to 2,400. Well, you got some resistance right there too. So we'll have to see. It's in the show me state, Missouri right now, whether it's going to be good or not. Okay. And let's turn towards copper. Freeport-McMoRan. That's my baby. But is it my baby at this price? Let's find out. I don't think so. Yeah, when did I like it? I loved it down here at 10. Nice ride. Get out at 50. Come back down. Get back in at 25.30. Ride it up. Ride it up. Maybe right now it's got to figure out what it's going to do. Still bullish, but starting to have a crack in the armor. Why would it have a crack in the armor? Because your RSI went from 70 here to what? 57. Ran out of steam. Now, if we can blow out on this one, if we can blow out blue, which is 51 bucks, not that far away, then all these things could roll over. Then it's going to mean that the copper craze has come to an end and a more full blown pullback is happening. See, if you can find some of these things that might roll over, the put options down here are going to be very cheap. And if they do go and give you one of these things where it goes boom, you know, like sometimes up here, you see where it goes from 44 down to 38, $6 move quick. Well, that's going to be very helpful to the puts, short-term puts down here. So if we can break here, open up this window here, the puts are going to be very, very interesting to me. All right, we're running out of time, so I got to go fast now. Here are some of the ones that were interesting to me last week. OPEC met on Sunday. They were going to come out and do something with the quantity. Supposedly, they've extended the cuts into next year. But China has really not got the demand. The demand's kind of weak over there. And so there's other factors going on. Plus, the U.S. is producing a ton of energy, and it's election year. Whatever they can do to bring the prices down for the election, they're going to try to do. So let's take a look and see what's going on. Devon Energy, okay. I look at a 5-day graph on it. So again, we're coming into this week. It's going to go one way or the other, right? So again, I'm looking at the 5-day here. And on the 5-day, this thing was rolling over. And so the put options on this going into next Friday, this Friday, last week, some of these have gone up 300%. Because even an option at $48, when it's at 49, an option at $48, if it goes $1 in the money, might go from 20 cents, might go from 30 cents to $1. That's up 300%. Another one was Occidental Petroleum. You know, going into today, here you went up to 62.50. You look at your 62 puts or your 61 or 61 puts. If you go down to 60, those options are going to go up 300%. If you go look at the servicing, and on the servicing, you got Halliburton. Halliburton went up to the purple lines. Again, you're looking at, say, a 36 put or a 35.50 put. If they come like that, you go down to 34.50, you're going to get 400% gain on it. You look at Schlumberger. Again, you're up in the 46 area. You look at your 45 puts, your 44 puts, 43.50 puts. You drop way down here, you're going to get good action, 300 or 400% on them. So again, obviously they don't all work like that, but it can work like that, particularly if you look at the chart, combine it with an event coming up like the OPEC meeting. or you can combine it with some report that's going to move things dramatically. But again, you know, uh, like they said in that movie, The Big Short, people don't think bad things are ever going to happen, and they price the options accordingly. If bad things happen, these things can spike. If they don't happen, you lose the small premium. Obviously, you have to do money management, and you have to be right at some point to get the big drop on something. But this is the kind of stuff that I find interesting when the options get cheap because implied volatility has come down and there's an event or some reason to believe that volatility could pick up. That's interesting to me because I have risk capital and I'd like to take a little bit and make it into a lot. And again, that's why you have to be patient, disciplined, and fortunate to obviously get the volatility when you put your positions on. All right, we are at the top of the hour here. So here's my little spiel to you guys. Some of you people are new to options, and I have been doing the options for a long time, so I know how they work. So if you'd like to get educated, you can contact me and I'll explain how I can help you. If you're experienced, obviously I've traded a lot and you may have traded some too. We could compare notes. I would be very surprised if you can't learn something from me. Either way, here's how you get a hold of me and how we can talk. Optionprofessor.com, OPTION, professor, PROFESSOR.com. Go over there, put in your information, or you can shoot me a quick email at optionprofessor@gmail.com with your contact information. I call you back, we talk, you tell me what you need. I work with on what you need. And then you also, I can share with you my ideas on things as well. We have a 1 hour online session together. Plus we go over my indicators, explain how they work, how I work them. And then whether you're doing short-term trading, intermediate trading, because I use the indicators for long-term trading as well, but obviously I do them for the weekly options as well. So yeah, you go there, we'll talk. I'll explain how it works. I know a lot of you people have, paid thousands and thousands of dollars. That's not my game. I have a very low rate, and it comes with a lot of information and a lot of education. So I think it's a very good deal. But I'll explain what I do, and a lot of people, most people, obviously, are very, very happy with it. In fact, I don't know anybody who hadn't been happy with it. So again, go to the website, optionprofessor.com, and put in your information. Again, there's a lot of things going on in the markets. I don't like to fight the tape, so I'm being very patient, although I have a belief that there's going to be a reversion to the mean. I don't have the evidence yet for that. So that's where the patience and the discipline comes in. But again, like I referred to that movie, The Big Short, I don't know if you remember it, they had a couple of guys work out of their garage and they made a lot of money by buying options on things that people didn't think would ever happen. And again, if you've been in the markets long enough, when people say something will never happen, sometimes it can. And again, things that have gone way, way up, obviously have a possibility of reverting to the mean at some point. And that's exciting to me because I see a lot of markets here that have gone way up that are candidates for reversion to the mean. I mean, even AMD, just as an example, why would anyone have thought on AMD with the craze going on of all the money going into AI? Who would have thought that at $230 within a month it was going to be at 140? Now, do you have any idea what the put options expanded to during this kind of a drop? So that's an example, a perfect example of what I'm talking about, of what we're looking for if we're trying to take a smaller amount and turn it into a larger amount. We're trying to find out if there's any reversion to the means or if there's going to be any big accelerations, because when options, you're buying them, the idea is to buy them when they are smaller premiums, and ergo the implied volatility is smaller, and then sell them when they get volatile, and then the implied volatility is exploding. So that's what we're looking for. This is the methodology I use to try to find them. Go to optionprofessor.com. Let's talk and see if I can help you. Okay. Have a great day, everybody. Top of the hour. Good luck, good trading. Got a lot of stock splits this week. We got the jobs report Friday, and we'll probably get a lot of action here this month with the realignment of the S&P and the realignment of the Russell. So get a hold of me and let's talk, and we'll see what's going on. Until then, good luck and good trading.
All right. Thank you to Jim. That was a ton of great info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to any of the past shows or presentations, including this one, as soon as I can get it posted. Also, I just have a quick special announcement. This Thursday, June 6th at 7 p.m. Eastern Time, I'm going to be hosting a special event with Casey Stubbs, where he's going to be teaching his golden glitch pattern strategy. And this is one of the best patterns for trading gold on low time frames. It's a easily identifiable pattern that even a beginner can start trading right away. And also, the great thing about gold is that it can be traded in almost any account. So there's equivalents in Forex, options, futures, stocks, or even crypto. And even if you have no interest in trading gold, it's a pattern that can be found in other markets, but it's just works especially well for gold. So be sure to join us on Thursday, June 6th, 7 p.m. Eastern Time. You can just go straight to TimingResearch.com and you'll be able to access the room. So be sure to join us for that. So, and thanks again to our guest for today. That was Jim, the option professor of optionprofessor.com. Thanks, everyone.